What's going on, guys? What's going on, guys? Let's get this started.
Recording in progress.
What's up, Mark? Natalie, how you doing? Joseph, Tiara. I know y'all waiting for that hour, the next hour to come in to start trading gold. Good afternoon, good morning, guys. All right, let's get this started. All right, so when it comes down to the equity markets, so Nvidia, we know pretty much the first company to hit a market cap of $4 trillion. We did have a majority of a risk on market today after the FOMC meeting minutes. So for those that missed it, just go to this video right here. This was the trade idea for the FOMC meeting minutes. So the direction that we wanted played out, right? We wanted to see more of a dovish, pretty much a dovish language from the headlines that came out, because when it comes down to economic data from the Feds, right, that the Feds are looking at, the U.S. data regarding inflation, labor, and growth has been showing signs that the Feds should have been looking towards cutting rates. But obviously, it seems like Jerome Powell is making it political, right? Because before we had the Trump administration, he cut rates 2 times last year. So it kind of makes it seem like he's doing this purposely if this continues to play out. It's going to be very hard for him to get out of this approach, right, without overly explaining himself, if he chooses to, on why they cut rates, if it happens, right? Because I want you guys to look at these headlines that came out. I didn't put it, one sec. We could just put it here. So one of the headlines that came out from the FOMC meeting minutes, right, is, where is it at? Is, you know what? Let me just add it real quick because I forgot to add this. One sec. Yeah, because this was the most important one. Yeah, cup right here. All right. You know, so I know there was a lot of headlines that came out from the FOMC meeting minutes, but the goal is to be able to dissect what is important, right? What is the most important comments that could give us a bias, right? Because we're looking for any little hint, anything that could signal either a pause or a cut, right? Pretty much we want to look for that edge when it comes to these comments. And these were the most important 3 of them that stood out to me. And a couple of participants noted that they would be open to considering a rate cut as soon as July if data evolves as they expected, right? So this to me was that trigger that signaled for NASDAQ buys, US 30 buys, S&P 500 buys, because this is giving us that dovish language that they're looking to cut rates for this July meeting. The only problem that we have, like, this would have been a great headline if NFP would have came out lower than expected, right? But the fact that we had a strong NFP print, this is why we didn't get that overreaction. But it still shows that the Fed's next step is most likely to cut rates. So this is why I still like the idea of the overall picture of weaker dollar and stronger U.S. equities. So good job for you guys that took advantage of that when it played out. So just to recap over the last rate decisions that we had this week. So the RBA, they left rates unchanged, right? Which this one actually gave a hawkish reaction because the expectations was a cut. So there was more of like a 95% chance of an actual cut for this meeting for the RBA, the Reserve Bank of Australia. But instead, they left rates unchanged. This is why we saw that spike in AUD strength, right? And the most important comments that came out, pretty much inflation has continued to moderate, but the outlook remains uncertain. So the issue is still dealing with inflation uncertainty, and they're still looking at right here that you can see the labor market still remains strong. So when we're looking at the Australia's economic data moving forward, right? What we want to pay attention to really, really seriously is labor data, right? If labor data could actually start easing, that will be a trigger for the RBA to actually initiate those rate cuts. If we see that the labor market still remains strong on top of seeing higher inflation, then we're going to be looking for more longer term buys on the AUD currency. But what we have to focus on with AUD is that it is a safe haven, a risk asset. So during market optimism, this is going to allow the AUD to continue to gain strength, right? And obviously market fear, AUD weakness. But still, I overall like the idea of AUD strength just because of monetary policy. And just moving forward to the RBNZ, really didn't care much for this. So they left rates unchanged as well, but not really as it wasn't really a big opportunity from like a AUD perspective. And that's really because, right, the markets are still expecting them to cut one more time for this year. Just one more second. I'm seeing equities push lower. I just hope that headline didn't come out and I missed it. Yeah, I don't see nothing yet. But yeah, if you guys just watching the markets real quick, I don't know. I don't think a headline came out. All right, but I'll just keep going. All right. So that's really it for that. Nothing really important happened regarding economic data throughout New York. And now it's been more of a quiet week, right? But so far, very quiet when it comes to economic data. News events that we're focusing on is just Trump now is just actually sending letters to countries, pretty much giving them their tariff percentage, right? So what we're going to focus on when it comes to these tariffs, right, is are we going to get any retaliation, right, from countries together? We obviously don't got we're not seeing anything negative so far. The only one, it's not here, but the only one I believe that was pretty outrageous was 50% tariffs on Brazil, but not really seeing anything else that is over 50. Only Brazil took a huge hit. But what we're going to focus on when it comes to tariffs, if we see any escalations, right? Remember, anything negative with Japan, China, or even Europe, that will probably cause an impact to the markets, right? Or if we see multiple countries join together and start to retaliate against the United States, that is something we'll pay attention to as well. But usually all the uncertainty regarding tariffs pretty much diminished from the markets, right? In April, that's what Jerome Powell said also, that April, that was the peak of uncertainty regarding tariffs. Now we're not seeing that uncertainty that was as seriously in the beginning of the year, right? So the only headlines I would focus on for tradable opportunities is what I said before. Focus on what happens with China, Japan, on Europe, right, regarding if it's positive or negative. So far, it's been positive. This is why we've been seeing gold pushing lower. We've been seeing equities pushing higher, all right, because the overall comments is positive. So tomorrow, another light day. But we do at 2 a.m. We do have Euro inflation data at 2 a.m. And then a New York session at 8:30 is every week we get the jobless claims. OK, but more tariff news should be impacting the markets tomorrow. So that's what we have to actually focus on is, again, I would just try to, because normally when he comes out with his comments, it's more like at 4 p.m. So after market closure. So it really doesn't help waiting for that type of time. But is anybody in any trade so far? Like, because the weakness in the dollar finally playing out, right? We started breaking below this area structure. So remember what I said in earlier, before, I like the idea of taking buys on AUD USD because of the divergence, right? Monetary policy is giving us reasons for AUD strength. And with the weaker dollar, right, that's coming in. We got the dovish FOMC meeting minutes. Finally see the weakness of the yields, right? Yields pushing lower. We also see a weakness in the dollar. Aaron, UJ, yeah, good job with that. So you see that the weakness in the dollar, and with the weakness in the yields, it helps show you guys the currency monitor. You could just see that how JPY is gaining strength, right? because of the weakness of the yields is giving UJ one of the best trades. That definitely a good opportunity. I think that was the best tradable opportunity was that. So I definitely recommend that. And as you can see, right, it's Asian session. So when it comes down to equities, I'm not really I don't want to like what I was saying earlier too, you know, try to catch better buy opportunities, let price push lower, and then let's look for better buy opportunities leading into probably most likely tomorrow. Maybe Asian session, but I would probably just leave equities alone over probably New York session. We take some trades, but over Asian session, I don't really think is worth it. Just let it consolidate. Let's see if price could push lower around that 22,800 for NASDAQ. I would prefer to see it push lower before I want to take buys again. I'm still liking the overall bullish bias, but I just don't like the idea of taking opportunities of that now. So if dollar continues to push lower for the session, and this is what I was expecting too, over Asian session, we was probably going to see dollar actually pushes lower. And I wish this would have happened over New York. We was like still in this range, but the direction makes sense, right? So even with that weaker dollar coming in, I personally still like most likely intraday sells on gold, but the fact of that weaker dollar, right? This is most likely going to help push gold higher. I don't personally like it from a trading perspective, but most likely throughout Asian session, we could possibly see gold give us a high for the session. I would probably like the idea of taking sells to the downside, right? Most likely if we could start breaking below 33, like 33.16, that could be a good area that you could set your alerts on at that support. If we could break below that area, I think that would be for me, I feel like that would be a better catalyst for sells. But as of right now, I wouldn't take sells if we are seeing the weakness of the dollar. Okay. So if we could see like later on Asian session, probably after 9, if we start breaking above 33,200, you know, we could get a nice order block in a 5-minute above resistance. We could probably take gold higher. You could definitely get a good scalp. If it breaks out of structure, I think you could get it all the way up to 33.24 for a good scalp opportunity. But I personally want to see lows continue for gold, especially if we have more positive tariff news coming in place. I would want to see more sells coming in place with gold. We're not getting no comments from geopolitical tensions, right? We're not getting no negativity from that. We're not really seeing any continuous negative comments from tariffs. Even the bill situation is dying down. It seems like the markets is like not even the markets. It seems like news is just focusing on the Epstein files again. So we're not really seeing any real market disruption this week, right? So very quiet so far. So that's what I would focus on regarding that. All right, guys. So yeah, just a quick update for you guys, just to put you guys on track. Just remember, save those ideas and focus on Asian session. I think maybe Euro could be a good opportunity over London session for that CPI. Yeah, like that's Aaron, I was covering that. So like Euro USD, it would be ideal if we get higher inflation for Europe, right? Because that would strengthen Euro. And with the reason for a weaker dollar, that's where I think it would most likely be a good opportunity taking those buys. But remember, it's going to be at 2 a.m. As you can see, we're already breaking out of structure. So I do like the idea of the weaker dollar. So right now, this is a reason to buy Euro USD, right? Probably not right now but not right now, obviously. The buys would have been right here at that break of structure. Once we started breaking above resistance on 1770, that would have been a better buy, especially like after the FOMC meeting minutes. That to me was a reason to take advantage of a weaker dollar. Euro USD is just inverse DXY. But now if you want to trade EU for London session, right at 2, we will most likely need higher inflation. Okay. Higher inflation would probably be the best option for taking this pair higher. Okay. So maybe and if we get a miss, then I would think Euro JPY, like Euro JPY sells would probably be the best bet for that. But if we get a beat in CPI for Europe, I would like to extend this pair higher. right? Just so you could take advantage of that divergence. I think that would be the really best play at 2 a.m. GU, it's more neutral. It's just going to do the inverse of the dollar. So if you want to trade GBP USD, I would just focus on DXY. But I really recommend, let's just look at how the pair moves. Once we get an impulse, you get to see that we get a correction. So just wait for the correction. Right now, I feel like you're kind of chasing the trade up here. So it's just a little late to the party. You know what I'm saying? So just wait till tomorrow. Opportunities is always going to come. But good job. I see Dimitri got USD JPY sells too. Yeah, I think that was just the easiest trade for the week. Yeah, these sales was very easy. Weaker yields, weaker dollar, and that also strengthens the yen currency. So I think that was really a really good play. Yeah, when it comes to GU2, we did break above structure. We are here too. I would probably watch GU also for London session. But most likely, again, if we get higher CPI for Europe, that's going to strengthen euro. That will weaken the dollar even more. And that would most likely help GU push higher too. But not right now. But if we could range at this zone, and then once we could start breaking above that high, right, of 36.20, I think that would be a really good play in the future, right, especially over London session. So that's what I would look for, is a weaker dollar. 45 pips, Blair and GU. Yeah, good job. Good job, y'all guys, catching USD JPY. Yeah, I thought that was a pretty easy opportunity. Just that break of support. The yields is being pressured. Also with Trump, I didn't post it, but I know that Trump was saying that he wanted them to lower rates to like 3%. But yeah, man, that shit is crazy. The fact that he's saying this live, right? Because if we know that Jerome Powell's term is going to end next year, right? Yeah, like you can see here, talking here. Yeah, Jerome Powell, who has been whining like a baby, non-existent to inflation for months, refused to do the right thing, cut interest rates now. But I believe he said like, we should be under 3%. Can't remember where he put that. But yeah, like what direction should we be taking the dollar? Why would anybody buy the dollar right now? Right. So it's putting the Federal Reserve at a very, very tough spot. Very tough spot. But all right, guys, quick market update. Hopefully this was helpful. If you guys have any questions, don't hesitate to reach out.